So you have to get a little creative, and that's kind of where that property management and that experience lies. So I would not lose hope. I think that there's plenty of deals out there that cash flow, and there's plenty of deals that I'm seeing people buy, and it's a lot easier at that 4, 8, 12, 20, 30 unit, because you don't have as sophisticated as capital coming in at that level.
Yeah, and excited to do this kind of a special lunchtime edition. We do these typically more evening, but I know, Ken, you're on the road, so you can tell everybody kind of what you've been up to this summer, and anything exciting you've got coming up.
Yeah. Well, I've been all over the place. I've been, now that some of the events are starting to open up again, I've been speaking a little bit. I spoke in Miami at George Gammon's Rebel Capital event, which was really, really fun. And then I went down to Belize and, spoke at the Real Estate Guys Conference down there. And that's always a fun conference, because there's most of those folks have, acquired properties and trying to take it to the next level. And there's just a few hundred there, but so it's a little smaller. And then we've been buying deals. So we ended up, we bought 650 units in Houston 2 months ago. Nice. And I got 455 in escrow right now in Austin. And, so I've been really working on deals. So I was on all morning with my acquisition guy and my COO. And active, really active. It's been great.
Yeah. And really, again, thanks for coming on with us. I mean, for everybody, I'm our head of partnerships at DealMachine. We'll start to get fired up here as people are trickling in. But Ken, again, thank you for your time today. We've loved, we've done a variety of things with different Rich Dad Poor Dad advisors, and we've had Garrett on, we've had Tom Wheelwright on. You have a fantastic YouTube channel. So anytime we have you guys on, I've always had great content out there to share. So I appreciate your time again today and sharing it with the community.
My pleasure. Yeah, it's been a blessing to be a Rich Dad advisor. I talk to Robert all day, and we're constantly studying articles and books, and then we as a team get together every Thursday and for an hour and a half and go over the topic of the week. And so, like everyone, we're just trying to learn and learn from everybody else. So it's an honor to be on your show again, and I'm happy to educate and help to the extent I can.
Yeah, and it's great to see people jump in. It looks like from all over the U.S. So keep throwing in where you're from. We might have a chance to network with other people locally on this as well among the community. But today it's really exciting to kind of go through a lot of the pillars that you talk about in your new master course. We actually you guys hooked up our audience too on the master course side. I'll share out the link a couple times here, but if you're going through today, you're like, hey, I want to learn more from Ken directly. You just launched this master course that you're doing pre-sales until September 6th about landing that first rental property. And I know if you use code DealMachine, you get $50 off, your courses. So appreciate you extending that to our community as well. So I will throw that in the chat here a couple times and cover that today for people. But we're proud to be a recommended tool within that course, but I'm excited today to kind of cover a few of those pillars and then give our community the chance to ask questions of you directly too. So
thank you. I think what I found is that everything's scary before you start, so a lot of people study, and sometimes they study so much and they never take action. But my experience is if you start small like I did, I started with a 2-bedroom, 2-bath, then you kind of figure out, well, maybe this isn't rocket science. It's not so hard. And there are hard things about buying a piece of real estate and finding tenants and all those kinds of things. But I would say start small, make small mistakes, and and then build on that. And it's real estate's a long-term game. It's not short term. It's not we're not trying to buy low and sell high. This is a long-term passive income strategy so that people can get financially free. That's kind of the whole point.
Yep. 100%. Yeah. And today we'll talk a lot about, your advice on getting to cash flow and buying for cash flow and holding that, thinking about that long-term rental strategy. To give people a little bit of your background, I mean, plenty of them know about, follow your content, love your content, know about you. But wanted to kind of give a little bit more context with your bio here. I just to introduce yourself, Ken McElroy, again, you have been involved in over $1 billion worth of real estate transactions. So you've done this a few times here. You've been at it for 30 plus years. Again, we talked about you being involved with Rich Dad Poor Dad, and you're also a best-selling author yourself. And now I'd highly recommend everybody check out his YouTube channel if you haven't already. You're one of the top content educators out there on that platform as well. And again, he just launched that master course. AJ, if you could keep sharing that out, if people want to follow up and check out his course, again, promo code DealMachine. You can use that link there. It'll also apply that. We'll get you a $50 off that too if you want to follow up from this and dig into Ken's specific course. But Ken, could you maybe talk about your journey a little bit here? I know you were getting into it, how you started small, but can you kind of talk through your journey and experiences to give people that full context to ask?
Of course, yeah. Well, I'll be honest, it's been a long, painful process.
Never easy.
It's funny. Like we do have just around 10,000 apartments, and I am currently the general partner with my partner Ross McAllister on a little over $1 billion that we currently own and hold right now. We have a management company that has about 250 people in it. We do our own construction, so we're ground up construction. And we're a developer. I own self-storage and office, but I started like a lot of people start with that first unit, and not really having any mentors or coaches or anything. And I bought a 2-bedroom, 2-bath with my own money. It barely covered, my operating expenses, but I was in the property management game right out of college. I was in college. I was managing apartments to help pay rent. So that's kind of how I got into the business. And then from there, I just started meeting these people that own these apartment buildings. At the time, I was managing small ones, 8 unit, 16, 20, 50 unit type stuff. And I started to understand the other side of it, the investment side. Sometimes it was their money. Sometimes they put a bunch of high net worth guys together. And so I was managing all of those in the first 8 years after I got out of school. And I said, well, I'm definitely on the wrong side of the desk here. I need to be on the ownership side. And I, it was scary. I ended up buying my first one. I didn't really understand how. I didn't know how to put deals together. I didn't know how to negotiate on the debt. I didn't know how to get the equity, but I didn't know how to manage it. So when I would see a property, and this is where I think a lot of people miss this piece, is property management, in my opinion, is one of the very most important pieces, because it can vet out the operational numbers before you get into escrow. And certainly, buying something is actually not that difficult as making it perform to what you think it's going to perform to. So over the years, I've had a number of different management companies that I've started and sold, and I've been in a number of states and done a number of things from condo conversions to ground up construction but primarily my core has been multifamily. And right now we have about 200 million under construction, and we have about a little over 100 million in escrow that we'll close on, in the next, call it 90 to 120 days. And we're trying to buy, a couple thousand units this year. It's super competitive, as you can imagine, in this space. But, that's kind of the short version, but it all started with that 2-bedroom, 2-bath. And then from there, how do I scale, and how do I hire a COO? How do I hire a CFO? How do I hire a property manager, to manage stuff while I go grow the business? And how do I hire an accounting department? And all that stuff I had to learn and did. And I'm really proud of our firm. We just got ranked in the top 10 in the country for multifamily. So, Yeah, thank you. We have a great corporate culture, which is a whole nother piece. How to keep people there, how do you incentivize people correctly, and not just with money. And so, it's a full-time gig, and I completely enjoy it.
Yeah, fantastic. Yeah, and I appreciate you giving a little bit more of that background there. I know, again today, now is your chance to really ask Ken questions directly on this webinar. So we want to keep it interactive. Feel free to throw your questions in the chat, and I'll call them out as I go. I have plenty of questions for you, Ken. So excited to kind of dig in here too. But appreciate you kind of giving us that background to start. I do know like one thing, and again, I think this new master course that you recently launched, had a chance to dig in myself and get early access, and it's really focused again on landing that first rental. So I love you kind of giving that background on how your journey's evolved over time. But I think one place that you do a great job of starting in general is helping people shift their mindset and thinking about mindset as such an important tool in your life. So can you maybe talk a little bit about how you really help new real estate investors shift that mindset from kind of these old beliefs and maybe like fears and apprehensions into new beliefs that really propel them forward and help them take action?
Of course. Yeah. So I think sometimes people look outward and they think that, everybody has stuff figured out, and I can tell you it's just not true. Everybody's going through their own stuff, and they're trying to get out of their own way generally, whether they're recognizing it or not. Sometimes it's conscious, sometimes it's subconscious. And I think it's digging down into your subconscious and trying to make that conscious, and then become aware of it, and then actually break through it. So there is a process there, and I think a lot of times people just bury things. And think of I'm sure you have friends that go from relationship to relationship to relationship to relationship, and they're always pointing fingers outwards. Well, they're carrying their same stuff into that next relationship, and so it's kind of the same thing. When we all grow up a certain way. My parents, they didn't go to formal education, and we grew up. They're very poor, and we can't afford that, and it was true. So I had to break through those barriers of that, call it lower middle class, and each time I had a seat at the table, I was uncomfortable myself. I was uncomfortable. Like, look around, I can't even believe I'm here. Who am I? All the little voice that comes into your head, and I think so. From somebody who's actually been through it. I'm telling you that if you can pound through the barrier, no one's going to do it for you. No one. You have to, get real. I think part of it is just getting people around you that support you and can encourage you and push you just a little bit. It's a long, slow process, so that I really believe that most people are just stuck, or maybe they just don't want to do anything, beyond what they're going to do. A lot of people are stuck in fear of making a mistake, or fear of loss, or whatever. And those are the same kinds of things that I have, even on the deal we put into escrow this week in Austin. We obviously, we're going to we raise a bunch of money to buy it from other people. And my biggest fear is not that deal not performing, and bringing everybody into it and have to talk to the investors about it and all those kinds of things. So I don't know that ever leaves, but I think just kind of harnessing it and addressing it and dealing with it and not burying it, is probably the biggest thing.
Yeah. And I'm definitely a firm believer and agree that, you are the sum of who you spend the most of your time with. So I definitely agree that, hey, leveling up your network, even if that imposter syndrome or that, that worry of a deal, not performing doesn't leave, you surrounding yourself with people like this, or, information like this, I think really changes how you think of what's possible in the world. So, yeah, I'm kind of monitoring the Q&A here. No surprise that people are coming and asking great questions about the market, just because I know you do a great job of breaking that down on your YouTube channel often.
Yep.
One question here. Anna Hensley said, do you think the economy is coming back? Are we really needing to prepare to pivot again in the next coming months? Like, where's kind of your head at on the current state of the real estate market?
Yeah. So, well, first of all, I just want to say, I think that a lot of times people paint the real estate market as one market. And even if you drill down into, a smaller area like Phoenix probably has at least 20 to 30 submarkets, and they all operate very, very differently. But generally, I'll just kind of speak broadly. When the lockdown first started, it was my belief, and they said, hey, nobody has to pay rent, nobody has to pay their mortgages, basically. It was my belief that we were going to have this big ripple effect, and we were going to have kind of a crash like we did in 2008, which I definitely went through. And at that time, we got a lot of properties that went back to the banks, and the property prices went down, and people were stuck with these big mortgages. And so it felt very much like that. One thing that has happened since then, of course, is all the stimulus money. So the stimulus money and the kind of kicking the forbearance and all the stuff down the road. And then we had this great migration, that's happened. People are this work from home, and people are kind of deciding where they want to go. And that's really changed a lot of submarket dynamics and market dynamics. And so there's a lot that's changed from obviously back, on those early crash predictions that we had. And really probably the most notable is the housing prices. And so, housing prices, as we all know, have jumped. And why do housing prices jump? Well, specifically, they jump because there's more demand than supply. That's the fact. So whenever there's more supply, then they don't jump, and we're actually starting to see more supply show up. And the way to measure it is there's a number of ways, but on the rental side, there's a number of ways, but on the single family side, it's typically measured through like MLS listings and average time, months that the house is on the market, those kinds of things. So those are really, really, really short in areas like North Carolina and Florida, et cetera, in the Southeast and specifically, but they're starting to show cracks in areas like Washington, D.C. and Boise, where you're starting to see more and more listings for longer. Now, how much longer, it's hard to know. And then I think that with the potential issue with the forbearance, I think that people are not going to lose their homes like they did before because they have lots of equity in them. And so they might have to list them. But I don't think that they're going to lose them largely. And so, but it doesn't mean that we're not going to see a bunch of listings over the next 6 months. So what's going to happen is we're going to see a bunch of listings, I believe, over the next 6 months as people try to get whole on their mortgages or whatever. But then we're going to have a pretty healthy, brisk run for rent. And, we're going to have quite a rent run here, I think, for the next 3 to 5 years. It's probably, if you're a renter, you're not going to be happy. If you're a landlord, you're probably going to be happy. And that is, again, a shortage issue. But the shortage issue really started years ago when the crash hit, and then going back to 2008, 9, 10, let's say, there was not a lot of new product that got built during that time. Lenders were not lending. So we had more people entering the market and less product. And so that is kind of the result of where we are right now. And then, the thing that could really slow that down are the construction costs and the labor costs that we're starting to see right now. So that makes it even worse because a single family home or even an apartment building, we're a builder, and our apartments are now, to construct, they're close to $250,000 a unit. And, they were under $200,000 a unit just 2 years ago. So, so what happens is that has to show up in other places. It has to show up in rent. It has to show up in the home price. It has to show up in those kinds of things. In order for that to even build, no builder is going to build and not make money. So, so what's happening is all these things are rising right now, and we're in this kind of an inflationary period. I think the Fed's trying to tell everybody that it's transitory. I don't believe that it is. I think that it's all a result of all the stimulus money, certainly some of these supply chain issues that we have going on. But now with this Delta variant, those supply chain issues might continue. So I think that we're going to go into a real affordability problem with rent, and certainly people aren't going to be able to buy houses. So the house sales are definitely going to slow down because of the affordability. You can't lower rent, or you can't lower interest rates anymore. So, so it's going to be an interesting time. It's going to be tough. It's going to be tough for a lot of people that aren't in the game.
Yeah. And I think one really interesting point you touched on there as well is when you said, hey, the real estate market isn't one giant, thing that's cohesive. It's very local. It's, even within Phoenix, it's segmented extremely. JS asked on here, can you provide more details on how you use US Census, the census data to really analyze your market research and talk about kind of where people are moving, that kind of thing?
Yeah, good question. So census data is just for one data point. So, we use a lot. So there are lots of things that we consider when we're buying somewhere. And census data is certainly one of those. So I'm going to cover a bunch. But for us, what we always try to do is to make sure that obviously the income levels, which is kind of where the census data lands, can cover and support the market. So the affordability of the market. And so you want to make sure that wherever you're buying, people there can afford it. And so that's primarily how it's used. But there's a number of other factors. If you have to look at supply constraints, and that could be geography, it could be from a city with permits and barriers to entry and all those kinds of things. Like Portland, Oregon has a growth boundary around it, as an example, because they don't want urban sprawl. So so everything inside of the boundary goes up in value, because it can't move out. And
right.
And so there's a lot of redevelopment. So every market's a little bit different. And the one thing I think that is not really being talked a lot about right now are schools. And so, you think about, I don't know what side you're on with regard to COVID or vaccines or anything, but here's the reality. There are, it's very divided. And so, you've got some states that are, schools are open, some states aren't open. And if you're a parent, you're looking for alternatives. And so, whether you're red or blue is actually irrelevant. The point is that there's a lot of kids that were home and we're not getting the quality education from Zoom that their parents had hoped, or maybe and there's a number of other issues. So I think that you're starting to see some of these migration. People are moving. If their kids are in athletics, they're moving to states or cities that are that are open, and the kids can continue that. They could be outside. So there's a lot of kind of undercurrent going around with the education system, and what's happening with the virus. And so the reason I bring that up is because those are migration issues. And, what happens is those people are moving from one area to another if they, of course, can work from home or, work or get something in an area that places whatever income they had. So I think the last study I saw was that there's a large percentage of people that now realize that they can work from home. There's a lot of people that are considering, actually, I think I read Microsoft did a study. There's 41% of the people are actually considering changing careers. So I think we're at the very beginning of what's going to be a pretty interesting migration. Could be from urban to rural. It's hard to know exactly, but some of the ways that you could follow that, some of the things that I watch are out-of-state driver's licenses is one really good indicator. So like if somebody's moving from California to Arizona, they're required by law to change their residency and all that kind of stuff. And that's a data point. There's also things like Ryder trucks, U-Haul trucks, Atlas van lines, and that stuff's all available online. So if somebody rents a Ryder truck from LA and drops it off in Phoenix, that's a data point. So you can kind of get an idea roughly. It's not completely perfect, but you can get an idea of where people are going. And then all of that stuff, what's happening is it's putting pressure on these little, in a lot of cases, a lot of these small little towns, like Boise, Idaho, which is on everyone's radar now, but historically it's been, call it a maybe third or even fourth tier town as compared to LA or Seattle or something like that. So, and now it's of course leading the country in home prices and rental growth and all that kind of stuff. And so, but there's only so many places there. So that's why, there's only so much supply and all this demand of people moving to that specific town at the moment. And so it's jacking everything up. And I think that's temporary. And I think it's dangerous to come in at that point.
Yeah, and I think one trend I'd love for you to speak to as well is Diane asked a good question, and would love to even hear the underlying philosophy behind this if you agree with this strategy at all, because I know you focus on cash flow, but she had said, hey, I noticed when I look at multifamily, they're not cash flowing, they're being sold at asking price or even above. Like, and what am I missing here? What other factors are you looking at? Can you maybe speak to what's going on there and why those are selling at that price or above?
Yeah. So I think that first of all, it depends on the level of multifamily. So if it's a 4, 8, 12, 20 unit, it's a little bit different than if it's obviously 150 and up. And the 150 and up, which is the kind of the arena I'm playing in right now, it's all private and institutional money, there's a lot of money in the system trying to chase yield. It's we're trying to, so even at 2, 3, 4% cash on cash, which is not great, they're trying to put big chunks of money. That's why Blackstone's coming into the single family market, and those are hard assets. And I think a lot of times people are trying to, they're trying to get around inflation, and it's not good to be pretty liquid in inflationary times because your purchasing power is going to be less. So and so what's happening is, again, a supply and demand issue. People are paying above market. Now, with that being said, if you're trying to buy something off the shelf that's that that doesn't have a lot of room to grow, then that's a little more risky than if you find something that I would call has a forced equity play. So what does forced equity mean? So I'll give you an example. We just bought this 2 properties in Houston, and they were next door to each other. So we had 2 properties, and there's an economies of scale of taking the fence down between the 2 and making it one big 648 unit property. And that was about $150,000 a year in savings, obviously when you combine 2 things instead of running them independently. There's also a big value add component. And the current owner had owned these properties since early 2000. And so they're 20 years dated. And so we've got 150 roughly in a value add. And in addition to that, they have washer and dryer units, actual physical rooms with the hookups and everything, but no washers and dryers. So that's another $40 a month. So you start to piece together, what would be considered a forced equity or a value add. So when you're buying it, it doesn't necessarily look great, right. Maybe a 1 or 2% cash flow. So she's right. But these are, again, for us, real estate is a long-term deal. It's going to take me 2 years to do all that work that I just explained. And after 2 years, my NOI or my net operating income should be 1 million higher than it was when we bought it. And so so we might have bought it at a low cap rate and a low cash on cash. But we have kind of a whole proven system to be able to grow the net operating income. And one other thing is we would never do that unless the market was proved out today. In other words, we're not saying we think rents will be, a lot higher. We're saying that's where rents are today in the market, and our unit is under market. So all we're doing is rising them to the current market. We're not stretching, in other words. So you have to get a little creative, and that's kind of where that property management and that experience lies. So, I would not lose hope. I think that there's plenty of deals out there that cash flow, and there's plenty of deals that I'm seeing people buy, and it's a lot easier at that 4, 8, 12, 20, 30 unit, because you don't have as sophisticated as capital coming in at that level. And so, we're still, and also we firmly believe that we're going to see an incredible rent run here over that period of time. But one last thing is you got to make sure, obviously, you're in the right market. There are markets that are not doing as well as others.
Yeah. And I mean, that's what we're talking about, finding those deals. I mean, we're a big believer in going the off-market route, going the direct-to-seller route. That's why we're creating an evolving deal machine to be able to do that and continue to scale that, and help you wholesale all the way through to buy and hold and be on the landlord side whenever if rents are going to have that rent run. But I know within your course as well, you really do a good job defining value add and how to add value to properties. I know you touched on it a little bit there, but could you maybe define that and really outline all the specific ways of how you can force that equity and add value?
Yeah. So I think when you're looking at a home, it's pretty simple to see, like on Zillow, how all the homes are, and you always know whether you're getting a good deal or a not good deal based on a rehab. It's kind of the same way, except there's a lot more of it. So the cool part about buying apartments or buying multifamily is that there's not a lot of good data out there that suggests, like you might literally have one block of tenants that, one block away, the rent, could be 100, 200, 300, 400, even less per month on similar type properties inside of, apartments and things like that. And what you have is you have that additional component. In other words, it's not efficient. Property management is not efficient. Which is really, really good for an investor. So because it's not efficient, you have small owners, let's say, that are trying to save their management fees or paying the management fee to the management company, as an example. They're trying to manage it themselves. Maybe they're local. Maybe they know what they're doing. Maybe they don't know what they're doing. Maybe they're out of state and they fly in every once in a while. But the point is that sometimes you find big opportunities sitting inside of the rent roll. And so, that's all we basically do every week is we get rent rolls on these big properties. And, even on the stuff that's professional management companies, you'll see massive differences in the same kind of unit type, from building to building to building for the same similar type property or the same similar type unit. So that inefficiency, I think, is very, very good for the real estate investor, because you can find, to your point, with your system and your software, you can find these small owners that are, maybe they're getting, maybe they're just tired, and from what they paid to now is significantly more for them. But what you have is you have an opportunity to go in and just through re-tenanting and upgrading a little bit, you might be able to get anywhere from $100 to $500 more a month, and I just was talking to somebody last week. They went in and they raised rent $700 a month on some of the units. So now, obviously, that's going to chase out the tenant. So on the renter side, that's not good, and that's why I kind of started it out that I think renters are going to be in for a bit of a sticker shock coming up. And so there's a lot of value that sits inside of, and just in the rent roll, in my opinion, even in the stuff I'm looking at. And that is the stuff that we try to buy, because investors, it makes sense to them. It makes sense that, okay, this is what the market is, and this is what the property is, let's say, and all we're going to do is bring it up, and and we can create that much more cash flow, and that kind of translates into this kind of value. And you can also do that on the expense side, as you know, and we go into that in the master course. There's a bunch of things that you can do. And owning a property management company, the reason why I own a property management company, even though I came up through that business, is because the devil in the details. There are things that you can do on insurance, on property taxes, on the mortgage payment, on the payroll, on the marketing, and even on the maintenance side to manage those costs, to make them very, very efficient. So, and those are all the tools that I think everyone should bring to owning real estate.
Yeah, and I think one interesting thing there you also touched on briefly is kind of that property management aspect. And as you build that rental portfolio, really figuring out how to evaluate property management companies, what to ask them, how to find the right fit. I know you include a checklist of that within your master course as well, but could you kind of walk through some of those factors of what do you recommend people look at when bringing on a property management company, and then even when do you make that transition if you're going to start your own property management company and hire somebody?
Yeah, so I think that it boils down to time, and I talk about this in the master course. If you have the time to manage your property, then then by all means, I think you probably should. But it's like anything, you just don't know what you don't know. And so if you're doing it because you're trying to save a little bit of fee, that's probably a mistake. So my suggestion is, if you don't know anything, and it's not just collecting rent and paying bills, there's a lot behind the scenes. And fortunately, those are the kinds of properties we like to buy. We like to buy from owners that think that way. But there's you can hire these property management companies locally. And I always like to say the property manager is more important than the property management company. So, the individual, how seasoned they are, how busy they are, and how many years they've had in the business is a very, very important piece. And property management can be quite easy and can be quite simple. It obviously all starts with the tenant selection, and then putting the right person in there that pays, and then kind of keeping that tenant up, with the market. But on the other side of that, how the marketing and the when you turn a unit, it's got to be perfect. There has to be, you have to get top dollar for something. And, and then there's a bunch of things that can get away from you as a property manager. And, as people spend money to, on the unit after they own it. So there's a number of things in there that the property manager, seasoned property manager, somebody who's been in this a while, can help you with. If you're if it's a friend, or it's maybe a realtor or that may not be the best choice. Even though it's easy and you have a friendship there, what you really want is to find the right person, and somebody that's going to be literally physically going to the property and communicating with you and sending you all the reports and those kinds of things. So the level of property management on the good side, is very report heavy, very communication heavy. And all the way down to the other side where you basically get none, and they're overspending, and there's vacancies, and you're calling and you have to fly out there to find out what's going on. And, those are the horror stories that everybody hears about.
Yeah, I'm sure. That definitely can be a factor for scaring people away there in terms of confidence. Yeah. I think, we had a couple of questions here around kind of the legal ramifications of owning, small apartment units and things. And I know in your course, you also talked about protecting your assets, and, you can place the ownership of a rental into an LLC. You can, insure that property with an umbrella policy and liability coverage. Can you kind of walk people through, legal ramifications, liability, how to protect yourself, kind of that whole concept?
Yeah, of course. So, I right now have nothing in my name. So, so what happens, I had an employee once that he was in Los Angeles, and it was his fault. He ran a red light and got into an accident, and nobody was killed, thankfully, but there were some people that were hurt in his car and in somebody else's car. And so what happens is, the lawsuits, they came quickly, and they blow right through your policy, and then they go after you personally. And so that is the reality of stuff. And so, I always want people to understand that, we're in a litigious society, and people sue people all the time. And so it's important to have some kind of a LLC or corporation around stuff that you own. And then what happens is, when they sue, they actually sue that LLC. And not you personally. And so if you have lots of things that you own personally, then they basically have access to all of those things. So maybe you have something you got inherited, or maybe you got a bunch of equity in your home, or whatever it is. It's all fair game. If stuff is buttoned up into LLCs or corporations, as an example, and there's a lot around that. And, obviously Garrett Sutton is a great person to, dig into the details of what kind of corporation. Yeah. He's fantastic. But what you want is you want, doesn't mean that you won't get sued, but then what they have to do at that point is they have to do what's called piercing the corporate veil. They have to pierce that in order to get at your assets. And so if you have, let's say you have 4 rental properties, and they're all in individual LLCs, which is not that much money, then then they have to sue all of those and pierce all of those to get at, let's say, equity or whatever you might have. And so, so that's what kind of asset protection's all about. In addition to that, you obviously want to have the insurance policies to cover, whatever you need to cover, on those kinds of things. And I'm no insurance expert, but I will tell you, there's a lot to property insurance, and having an umbrella is very, very important. We have an umbrella. And so what happens is that when they punch through some of those limits, then your umbrella kicks in. Based on the umbrella that you buy and all that kind of stuff. And so you really do need to figure all of that out, because things do happen. I don't remember ever not having a lawsuit on our stuff. Actually, we have, you think about it, we have slip and falls, we have kitchen fires. We had a guy, an arsonist, burn some units in Houston. He ended up burning units, and he got caught. And there's a whole investigation. We have floods where the water comes in from a unit above and floods people's stuff below it. And so as you start to get tens of thousands of units like we have, things happen. Life happens to people, and they sue. They sue the landlord. All that kind of stuff starts to kick in. One other really important thing that I talk about in the master course is, I think it's important for landlord to have the renter get renter's insurance. So you can make that a requirement, and then that is also another type of insurance that can also kick in and protect the landlord. The renter's insurance is to protect the landlord for any kinds of things like that can happen at the renter level.
Yeah. These are all great tips. I appreciate it, Ken. And I think, looking through this as well, we've had a couple of questions roll in that we're asking about different asset classes, whether it be, single family, multifamily. And I know you talk often about cash flow and rentals versus capital gains, like the fix and flip and that, that type. So can you maybe break us down, maybe with an example as well, of why you teach cash flow and why you focus on that side of real estate investing?
Yeah, well, I will say, it's easy to say you should always be cash flow. But in my early days, I needed cash too. I needed fees and I needed money. So, but I always was conscious of that, that cash flow number. So I think the goal, so I'll give you a great example. When I, in 2000, I decided to get into the condominium conversion game, which meant that I was buying these 200, 300, 400 unit apartment projects in Vegas and Portland and Scottsdale. And I was basically converting them all into condos. So think of buying it for 100 a door and selling it for 200 a door, so it's basically one big flip. Now there's a tremendous amount of work, obviously, in on the legal side and getting all that. And I created a real estate company to sell them all, and we were in different states. And it was a good 3 to 4 year run that we had, and we sold several thousand condos, and we made a lot of money. So you think about several thousand, at an average profit of say 50 to 100 grand. So me and my partners, and we made a tremendous amount of money. What I failed to realize was that I paid a lot. So that's one big flip, but I paid a tremendous amount of money in tax. And at the end, I didn't actually own anything. So I had flown all over the place, bought all this stuff, done all this work. And literally I had a bunch of cash in the bank. I had some nice stuff, but I didn't own any real estate at the time. And when all the dust settled. And so I was like, man, that was fun. It was, we all did really well, but it's not gonna, now guess what the reward for doing a good job is, a bigger job. So, so I was like, okay, so, do you rinse and repeat? Do you go back and do that again? And then I'm just on this gravy train of, making a lot of money transactionally, really honestly, no different than a commissioned insurance person, commissioned real estate, commission, and now it's a little bit different. I was making quite a bit of money, but it's just fully transactional. So that's a capital gain strategy where I forced the equity, sold it. We had a whole strategy around it. After that, we were like, gosh, okay, we want a different strategy. And the strategy was to grow and start this, reoccurring revenue model. Let the tenants pay down the debt, let there be more cash flow. And that's what we started to do in the early 2000s. And that's what we've been doing ever since. And every once in a while, we do sell off a property. In fact, my partner called me yesterday. We got an offer for unsolicited. Well, they're always unsolicited at this point. $41 million for this property that I think we bought for 18. And we routinely turn those down. It'd be great to harvest that kind of capital, but then what do you do with it? It's just, so right now that, our basis is so low, we're generating good cash flow on a lot of these properties. And, the tax advantages for holding stuff through depreciation, which we talk a lot about in the master course, we're getting tax-free income. Through using these depreciation expenses. And so, we're trading that cash flow for for a capital gain that we're actually going to kind of recoup all those taxes. And so the tax, finding the property is hard, and finding a cash flowing property is hard, and giving it up for a little bit of cash, especially now as we go into these inflationary times, I think is potentially a mistake.
Yeah. And I think you do a great job both in the course and on YouTube, often addressing what are those most common mistakes that you see real estate investors making. Can you maybe outline if you have included, recently on, within the course, and for our audience, especially for that first time real estate investor, things to look out for?
Yeah. So, well, there's a lot, and speaking from experience, I think the biggest one is I had the belief that I needed a whole bunch of money all lined up before I went out and found something. And this is probably the hardest one to break through. And, to your point, I think that education is is the thing that gets deals done. So when you see something, you don't actually need the money. You just need to be able to see it. You need to see the opportunity, see how to create the opportunity, see how to create the value, and potentially see the exit if that's what you want. And those are all different things. And so I believed in the beginning that, how am I going to make an offer on something without having the capital? And that makes sense. I mean, I grew up that way. You always saved your money and then went and did something. With real estate, you kind of have this free look, with a seller, and so there's an opportunity to take a look and put all those pieces together on with the contractors, with the rent surveys, the value add piece, and the debt and the equity and all that stuff. It's all just part of the pieces. And so what I found is there's more capital than there's definitely real estate. So think of, and I'll give you a simple example. I started buying billboards, I don't know, 5 or 6 years ago. And just because it's real estate, if you think about it, it's, a pole with two sides, or if it's digital, it's more. And, but it's real estate. And essentially, a car dealer, a casino, whatever, gives you $1,000 to $3,000 a month per side, and it cash flows. So there was a piece of land that, in Phoenix that came across my desk. I was taking a look at. It was small. It was only a couple acres, but had a billboard on it. So, and the entire land was $290,000, and I bought it for the billboard. So I didn't care about the land. So what I did is I bought the billboard, put an easement around it, called some guys in the billboard space, and I said, "What do you think you can do on this?" And they said, "We think we can do about 30, 40 a year net." And I said, "Okay, that works." So I bought the land, put an easement around it, kept the billboard, relisted the land, sold the land. So I got the billboard for free, and it generates 30 or 40,000 a month or a year. So the point is, it's what I saw. So if I didn't have the money to buy the land, which I did, I could have easily taken that to somebody and said, "Look, this is something that we can do together. You can put debt on it if you need, you really only need maybe 30, 40, $50,000 to buy something like that. And the whole deal makes sense financially." And so it's what you see. And so, all real estate deals are made in your mind. It's, whether it's my friend bought an old grocery store, and he converted it into self-storage. That's what he saw, and that was his space. So, and I think you're going to start to see that with some of these office buildings. Some of these office buildings are you're going to start to see conversions. Some of these micro hotels that did not do well during COVID, you're going to start to see those redeveloped. So again, those are opportunities. And so you might drive by those every day, but it's because of what you don't see. It's the education. And then something like that, and you get really good at it, then they start to show up, and then you're starting to put pieces together, and then the money comes. And so that's why I always try to tell people, you really need to learn as much as you can about this business, because there's a lot, and there's a lot of ways to make money in real estate. And it's not always just buying a home, fixing up the kitchen and selling it for more to the next person. That's as basic as it gets, but there's so many other things above that people don't see.
Yeah. Does that just come with experience and education, or do you have any recommended processes you go through or resources you use that to kind of evaluate all of your options, or just curious how, because you're great at that.
Yeah. Well, I think that I'm always looking. So, I'm in the office building space. We developed self-storage. We do land development. Obviously, we do multifamily. We've done the condo projects, and I've looked at industrial, although I haven't built any. And so I think as you're in the game, if you have kind of blinders on to what you do, then obviously you don't even accept or think about, so I always take meetings. I always look at things. They can very much be distractions though, too. So that's another thing. You got to be careful. Yeah. You got to kind of balance it. You could spend a lot of money and time on something that doesn't make sense. And so what my door is always open. I'm always getting crazy deals and emails and things like that from people. I'm always looking at everything I can. And, and then I just kind of apply the same due diligence and strategy around it. Does it cash flow? What's the exit? How do you put the pieces together? Kind of the same thing. And, I've got friends that are in the car wash business, both, the ones that spray and the ones that, have people, and that's an area that, is fascinating to me. And, so there's, whenever you can find a business, that will pay you rent for a piece of land, I always tell people, go find a vacant building and tie it up. It'll be less, trust me, if it's vacant, and then find a tenant. Like, you know what I mean? Like, it can be that simple. Right. And so now you might not find a tenant and you might waste your own time, but it's the process that you learn from.
Mm-hmm. Yeah, that's what I was going to mention too. Is there are just so many different niches within real estate investing that it can be easy to get overwhelmed and to have that analysis paralysis and not take action. And that's probably the biggest thing we're trying to teach people with DealMachine too, is just saying like, hey, where you're most likely to find a cash flowing property or a good deal is off market. The biggest thing is just to start and get out there and start to do the most basic thing, because you're going to learn from that experience and from taking action. So I know we're running out of time here. Only have a few minutes left. One last thing I wanted to touch on within your course that I think you really do a great job of outlining, that I'd love to hear your thoughts and tips here, but is the subject of negotiating. And you talk about, hey, regardless of whatever you're buying, if it's a billboard, if it's a car wash, whatever it is, negotiating is going to be a part of that, and an extremely valuable skill to landing something that's cash flowing. So can you kind of break down some of your principles that you teach there and live by when negotiating?
Of course. Yeah. Well, the first thing that I would recommend is there's a phenomenal book by Chris Voss called Never Split the Difference. Mm-hmm. And I would definitely buy that book and study it. I met Chris. He was the leading FBI negotiator. Just some of the principles. He's also, you can watch him on YouTube and that kind of stuff. And there are some really, 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 really good strategies in there. And I just want people to know that there are definitely techniques that can be used when you're negotiating, and things that you can say differently. And it kind of goes back to that original programming. You almost have to unlearn and relearn. And so they're subtle, and they're not they're not necessarily take it or leave it or anything like that. They're subtle things that you can do. And I know we talked about this a little bit on the master course, but I'll give you an example of one that came yesterday. Actually, we had an off-market deal that we signed an NDA on, and I sent it to my acquisition guy, and the guy says, we need X per unit, and if you offer less, then we're going to have to counter at this number. So then we got back into the numbers. I said, okay, well, send us the rent roll, send us the operating expenses. And so we took a look at it, and the deal negatively cash flows about $300,000 a year. So essentially, and it's easy to see what the seller paid. So we went back and said, listen, I understand you want this number, but right now you're negatively cash flowing 300, and I'm not going to step into your shoes and try to unwind a management issue for you, because clearly They had run this property very poorly, and so the owner listed it to just try to get out of it. And they had put, I think, 4.7 million into the property, and the whole thing was just a mess. Still might be an opportunity, but I just stuck to the math. We just went back to the math and said, it has to work for us too. We're not going to step into a $25,000 a month negative cash flow. And so instead of, just lowballing them back on a number, you got to do it with math. And so that's the way I handle the real estate. Is I don't ever feel like it's not, it's not contentious. It's like, hey, these are your numbers. How one of the things that Chris Voss says is, how am I supposed to do that? You know what I mean? Then put that back that's a negotiation tactic, is, to the seller, well, how am I supposed to take on $25,000 a month in negative cash flow from your seller? And so you put that back. So it's negotiating, but it doesn't feel like negotiating because you're using facts. So there's a bunch of ways. And that's just one example. And but what I always try to do is just stick with the math. And what a lot of people do is they just lowball. They don't understand why. They're like, oh, like, again, that's why the book's called Never Split the Difference. I'll meet you halfway. And I'm like, no, that's not how we negotiate. We don't meet halfway and close the deal. It has to make sense financially.
Yeah. And I think when you outline it for people like that, with that transparency, they understand when it's an unreasonable ask. Like you said, you put it back on them, and they're, and I think they appreciate that as well, because you're walking them through transparently the whole process and showing you're on the same side here, that, hey, we both need to make a deal that works for either way. So
yeah, and it usually works. The broker who had the deal obviously already knew that before they gave it to us.
Right.
We flushed it out in 24 hours, and I don't know if it'll be a deal or won't be a deal. And you know what? Somebody might buy it and step into that. And as I like to say, they're going to catch a falling knife.
Right. Yeah. And that's true for anything, like, if they're negative 25K a month, or if they're, it's a single family home, like walking them through that process transparently, is a solid way to win people over. But,
and you learn a lot too.
Yeah, 100%. I wanted to make sure, I appreciate you run over just a couple of minutes, Ken, with us today. Wanted to share this one more time. I know for people who want to connect with Ken directly, we have that master course. If you use that link, you'll get, and then use promo code DealMachine, you'll get $50 off any course with Ken. You guys are doing the pre-sale through the next week or two. So I know it's a brand new master course on how to land that first rental property. So, it's been great today, kind of walking through some of those tenants, answering questions from people. Your YouTube content's fantastic. So I, want to point people towards that. But is there any other way, Ken, that people can follow up with you or should keep in touch?
Yeah, absolutely. I think the best way is just keep going back to kenmcelroy.com. We have a number of blogs and newsletters, and we're always doing things, and we're always trying to get creative. What we're about ready to do is kind of get into our deals and educate with real stuff on things that we're doing right now. We're bringing on some advisors next year, a CPA and an attorney, and they're going to be part of the channel so that people can actually ask questions from them. And, so we're trying to make the channel kind of a one-stop shop for people that, have all these kinds of questions like we went over today.
Love it. Yeah. Well, hey, again, appreciate your time again today. And, would love to do more of these in the future.
For sure. As always, it's great being on, guys, and appreciate your time.
Thanks, Ken. And everyone watching the special lunchtime webinar, this is Matt Camp with DealMachine, and happy deal finding.